Well, the government screwed up again, and they basically printed another $1 trillion. What just happened? This is crazy. I can't make this stuff up. I talk about Bitcoin because it's a currency that can't be debased. No one can print more of it. And we continue to talk about how the Fed is adding to their balance sheet, continuing to increase liquidity, even when they're trying to bring inflation down. And it just makes the case stronger for Bitcoin. And we'll look at that here today because it is crazy what just came out from Goldman Sachs. Basically, the government's miscalculated by about $1 trillion because they were too aggressive with some of their stimulus. So I want to talk about that. I also want to go through some of the assets that will be affected by this in a good way. And then take a look at if we're going to buy crypto, what should we be careful of? Because there are two or three different cryptos that we're going to take a look at that have basically fallen out of the top 10 in the last year, and they're all connected to each other. And I just want to talk about that. If you don't mind, please hit the subscribe button underneath the video so you can see future videos just like this. Also, turn on that bell notification so you know right when I post future videos. There's also a link down there to the Patreon in case you want to know when I buy and sell, because I actually have been selling a crypto. Even today, I sold and then bought different cryptos with it. So if you want to know when I do that, you can check out the link. I also posted a Q&A just in the last 24 hours going through some of the questions from the Patreon. So you can ask questions there and I'll answer them in video format. Now, I also want to thank today's show sponsor, but we'll talk more about that later. Now, crypto is looking fine, just pretty much sideways. Not too much noise this weekend in crypto, but it should be an interesting week ahead with the PCE coming in, which is the Fed's preferred inflation gauge. We also have Fed speakers in a few days, actually throughout the whole week. And then we have the end of the quarter. We have companies announcing month-end numbers, quarter-end numbers. We're going to have quarterly reports. We're going to have CPI in a few weeks, so don't check out now. Even though it's getting a little bit quieter after the banking collapse, I wouldn't be surprised if that started to cause some more trouble. Now, let's get to what's at hand here. Basically, we know that the Fed is increasing liquidity or increasing their balance sheet. They added $93 billion last week, added $292 billion or $293 the week before. They say this is temporary. People don't believe it. They think that basically the Fed's just adding liquidity and adding to their balance sheet, and that is going to continue. And they have no choice because they're in such a tough spot with interest rates so high. They can't look weak, but things are breaking. Apparently, they're considering expanding the emergency lending facility for banks in ways that will give First Republic Bank more time to shore up balance sheet. I don't think that they can have more banks go down, really, without bailing them out, and it's a bad look if they go down based on the Fed having to raise rates. It's a really bad look that they keep on raising rates as banks are falling down, and they have to come in and bail them out anyways. We know that the FDIC, the Fed, the SEC, and the Treasury all met on Friday in an emergency meeting, probably just getting ready to announce something or getting ready in case something else breaks to come in and save the day. So those are on the horizon, more liquidity injected in the system. Last weekend, we heard that they were basically boosting global liquidity because other banks need more access to US dollars as well. And now some people too think that we're going to see a bailout in the commercial real estate sector as well. The All In podcast, really popular business podcast. The host there, or some of the people on there, said that they think they're going to have $2 to $3 trillion injected to save the commercial real estate market here in the U.S. So there's so many different ways that they're inflating the money supply. And now we just got more news. The real cost of the Inflation Reduction Act subsidy is $1.2 trillion. Now, this is coming out from Goldman Sachs. Just as a reminder, the Inflation Reduction Act was set to curb inflation by reducing the deficit, lowering prescription drug prices, and investing in domestic energy while promoting clean energy. And this was about a $1.2 trillion bill, I believe it was, something like that. But the clean energy part of this and the climate part was only supposed to be $391 billion, and it was supposed to go over 10 years. However, coming from Goldman Sachs now, they underestimated how big that part of their bill would be, the energy and clean energy part. Instead of $400 billion, Goldman Sachs is estimating this is going to cost the the US 1.2 trillion over 10 years, basically because they didn't limit the amount of IRA tax credits that were going to go to some of these companies and individuals. So the forecast misses for electric vehicles. The difference is 379 billion. Green energy manufacturing, 156 billion. Renewable electric production, 82 billion. Energy efficiency, 42 billion. And we can keep going through. Basically, they didn't realize so many different companies were going to try to claim these subsidies and claim this money. They say the difference in the EV credit estimates owed to the projection that more vehicles will meet the self-efficiency mineral and battery material conditions for the partial credit and the full credit. Basically, a lot of people want in on this, so they're moving around where they're making their batteries, and they're trying to move over to electric even faster because they are getting this extra boost. So this is just another egg on the face of the U.S. government. It's pretty bad. I mean, this is going to stimulate the economy, but that's the opposite, really, of what they're trying to do. I mean, they're trying to help people out, but it's kind of a self-defeating thing, because if you're trying to lower inflation, right, you're going to save people money and then they're going to spend it somewhere else, right? When you save someone $7,500 on a car because you think that they need it to get an electric, they're not just going to sit on that money. They're going to go spend it somewhere else. So it's really like the inflation what's the opposite of reduction? The Inflation Increase Act of 2022, right? So this is pretty bad. This is obviously just stupid because they didn't put any limits on this. It's not like they said, "Hey, we'll do a max of 400 billion or or give ourselves 20% a 20% range for error." But instead, we're going to have a lot of printing in this way. And who's this going to help? Well, it's going to help these manufacturers like Tesla that are specifically invested in electric cars and how well they're able to sell these cars. They're going to, a lot of people already projected that they're going to be one of the main beneficiaries of this Inflation Reduction Act, but also they're going to be able to get even more subsidies for everything else. And if they can continue growing quickly and continue to reinvest in this, it's just going to make it so much easier because they're getting so much money to do it. Another thing that will probably benefit Bitcoin, because again, we're going to have more of a deficit. We're going to have more debt. We're going to have more liquidity in the system. We're going to have people have more money. Households have more money. And Bitcoin will probably do well from that. Now, of course, if they have to continue raising rates because inflation gets out of control because of the Inflation Reduction Act, that will hurt Bitcoin, I think, a little bit in the short term. If we have to go higher than we expect, but it really just shows, there's a reason for Bitcoin, because the government, no matter what they say, even when they're saying they're literally trying to fight inflation, they are doing things that stop it from being reduced. They're doing things to make inflation worse and to continue to print more money. So I'll get off my soapbox here about Bitcoin, but this is just a crazy article that really underscores how bad the government is at trying to estimate how much money they're going to spend. Now, speaking of this, I do want to thank today's show sponsor because it has direct correlation with the money supply. Now, on this channel, I talk about diversification a lot. There are some indicators that we are heading towards recession. There's a question whether we'll hit that soft landing or not. But BlackRock is now saying that they're ready for a recession unlike any other. And what has worked in the past won't work now. There's a huge inversion of the yield curve, basically the highest that we've ever seen. Gold has done pretty well in the past couple recessions. If we look here, actually 1990, it's the worst return, and it still did about 9% in just a very short period of time. If you look here, 2000, we were really at the bottom, around 446. Over the coming years, it went all the way up to over 2000. In 2008, it fell down in the middle of the recession, but then came right back up. Then even in COVID, it did pretty well. Now, I am partners with Monetary Gold. I'll put a link to them underneath the video. You can call them as well. And they basically allow you to buy gold and other precious metals. They have over 50 years experience, and they have a large selection of gold, silver, and platinum. They have free shipping, and you can actually get IRAs, precious gold IRAs. You can also buy stocks and other stuff in them as well. You don't just have to buy precious metals. So feel free to call the number 888-301-6165 and ask about the no fee for life IRA. But I'll put a link to them underneath the video. Of course, always do your own research. Big thanks to Monetary Gold for sponsoring this video too. Now I want to go through for a second and talk about, if we're trying to invest in cryptocurrency because we think it's going to be a hedge against inflation, where do we put it? Because, I personally am mostly invested in Bitcoin within cryptocurrency. I think Bitcoin will do really well. I think it has one of the strongest narratives. It's definitely, I think, the safest cryptocurrency. But a lot of other cryptos that people thought or think are safe are stablecoins, right? There are two stablecoins in the top five cryptocurrencies, and people go in and out of stablecoins to get into different cryptocurrencies. Generally, up until a year ago, everyone thought stablecoins were really safe. I mean, they don't really move more than a cent or something like that. You could get 8% yield, and people didn't really realize the risks of them. Now, when we look back, we're starting to see a lot of stablecoins die. We had BUSD basically die a couple weeks ago because of regulation in the US. Basically, the SEC went after Paxos for issuing BUSD. And because of that, they've started to fall off in terms of market cap. They're being taken out of different pairs as well on major cryptocurrency exchanges. So it's harder to get liquidity for BUSD because you can't trade between, let's say, BUSD and Bitcoin as easily. Redemptions eventually will stop on BUSD, I'm sure, as well. But this crypto has basically been cut in half. Now, luckily for anyone that held BUSD, the price is basically the same. That can't be said for all of these different stablecoins. For example, just a few weeks ago, when we had a scare with the banking, with the whole U.S. banking sector, USDC fell in price. So when this happened, we obviously had the price go down to about 85 cents at one point. Now it's back up at $1, but this scared the crap out of the market. And it shows, even if you are in a stable coin, maybe it's not so stable all the time. Even if they have one-for-one reserves, the fact is they can't spread it out between all FDIC insured deposits, which is kind of scary. So another cryptocurrency lost its peg, and some people lost money. I mean, if you held through it, great, but a lot of people didn't. A lot of people sold, obviously, because if it was 99 cents on the dollar, someone had to sell to get it down to 95, 93, 85. So a lot of people sold. Some people made money from that, but a lot of people were just scared after something like UST. UST fell from $1, and this is one of the biggest stablecoins at the time, down to 2 cents. And it fell over just a few days. I lost money in this. And this depegged another cryptocurrency that had nothing, well, I don't want to say it didn't have anything to do with it, stablecoin, but this wasn't even supposed to be a stablecoin. Luna was one of the fastest growing, one of the most hyped cryptocurrencies out there. It was up at $116 per token, and now it's at 0.0001. So it fell 99.9999% or something in just a few weeks. So what I'm trying to get at here is stablecoins aren't always so safe. You have to be careful. And of course, other cryptocurrencies can fall too. But I just want to remind you that I think something that I hadn't really realized until recently is out of the cryptocurrencies that have fallen 99%, that have actually been popular cryptocurrencies, I'm not talking about like way down the list, but out of some of the top cryptocurrencies that have broken down, a lot of them had exposure to stablecoin. And again, whether it's USDC, it just fell like 13, 14%. But now, I mean, the market cap is falling. When we look at that, it was over last year, the max was about 55 billion. Now it's $33 billion, probably going to be fine. USDC is probably going to be fine. Circle is going to be fine. It probably won't lose peg for any substantial amount of time, but still, it's kind of a cryptocurrency that's withering away a little bit. A lot of that's going into USDT, but UST also fell down 98%. Luna, now Luna Classic, but that fell a drastic amount because it just had exposure. It had a mechanism that caused it to be related to UST, a stablecoin, and BUSD also falling in popularity a lot as well because of regulation. I think the government will probably continue to regulate stablecoin. I don't think they really want an alternative to their own CBDC or to the US dollar. Bitcoin is something else entirely, but they're probably going to continue to rule that some of these stablecoins are securities. So just be careful of that. And this is, again, not anything that's super new, but we have had several cryptocurrencies that have died over the last year. And again, most of them have to do with stablecoins. So if you're looking, at 6 months or a year at some cryptocurrency and it's got some great ecosystem that's really specifically driven adoption through stablecoin, I'd just be careful. Especially, obviously, if it's algorithmic stablecoins. That is another beast that's very risky. We've never had an algorithmic stablecoin be able to continuously hold peg very well, but everyone wants it because it's a golden goose. Basically, if you can create something that you don't have to back one-to-one, basically you can do a lot of risky stuff with it or make more money behind the scenes. That's great for the company, but not great for you if you're holding that stablecoin. But a lot of people will continue to try to build that because it's really profitable for whoever gets that adoption to continue. So just a reminder, Bitcoin is much riskier than something like an index fund, and yet it's so much safer than everything outside of the top 10, much safer than everything else, I think, within the top 10. Ethereum is better, I think, than everything else as well. Of course, stablecoin, it's fine to get in and out of for a short period of time. Really, there's a very low likelihood that if you get into it just to trade or you hold some for, a couple hours or a day or two, that there's going to be any issue. But just a reminder to keep your tap dancing shoes on if you hold any of this, and be careful during the next bull run. We'll forget some of these risk management principles that we have learned during this bear market, and some people will get caught with their pants down basically again. So be careful out there. Thank you so much for watching. Let me know your thoughts on what the Fed's doing and what the government's doing and their miscalculation of $1 trillion. I know that I'd love to miscalculate $1 trillion in my accounts, and I will see you in the next video. Bye.